All right, let's get right into it. The Hackett Group, ticker HCKT, just dropped their Q2 earnings, and well, the market's reaction was pretty brutal. So in this explainer, we're going to tear down the numbers, unpack what management was trying to sell, and pinpoint the exact moment where it all went south. Yup, you see that right? Negative 9.06%. That's the haircut the stock took the day after the earnings call, and on heavy volume too. So the big question is, what on earth happened? You know, what's funny is if you just glanced at the scorecard, you might scratch your head. It was a classic beat and miss. Revenue? They actually beat expectations, coming in over 3% higher than the street was looking for. But, and this is a big but, their adjusted earnings per share, the bottom line, missed by a pretty wide margin. And right there, that's our first big clue that something was up. Okay, so to really figure out what drove that earnings miss, we've got to pop the hood and look at the Q2 results piece by piece. So that top-line revenue number was $78.9 million, and management was quick to point out, hey, that's actually above the high end of our own guidance. Fair enough, that's a good thing. But the adjusted EPS of 38 cents, that only hit the midpoint of their guidance. So you're seeing strength on the sales side, but it's just not trickling down to the profit line as strongly as you'd hope. And this is where the picture gets really clear. You can see the story of two different companies here. Their global SMBT segment, which is where all their cool new Gen AI stuff lives, that was up a solid 5%. Their SAP business was on fire, up 11%. But look at that Oracle Solutions business, down 7.5%. That is a massive drag on the whole company. Management said a big project ended, but that excuse only goes so far. A core part of the business is bleeding, and the market saw that as a huge red flag. Now, let's talk about something every investor loves: stability. Predictable recurring revenue. For Hackett, that's sitting at about 21% of the business. And look, that's not nothing. It's a solid foundation. But for a company that's trying to tell you they're pivoting to a platform-based AI model, investors really, really want to see that slice of the pie getting bigger and a whole lot faster. And that brings us to the main event of the earnings call, because while the numbers were a mixed bag, the story, the narrative from management was all about one thing: artificial intelligence. I mean, listen to this quote from the CEO, Ted Fernandez. He calls it a generational opportunity. He's not just saying AI is neat, he's telling investors that Hackett is at the center of a fundamental shift in how business is done. This is the big, bold, long-term vision they're selling. And to be fair, they're putting their money where their mouth is. They're speeding up the launch of their AI XPLR platform, they're building on their ZBrain tech, and they're buying companies like LeewayHertz and Spend Matters to build out this whole ecosystem. So the point is, this isn't just fluff. They are actively building and buying the arsenal to make this AI dream a reality. So you've got these so-so Q2 numbers on one hand, and this incredibly bullish AI story on the other. So where did it all fall apart? Well, it all came down to one little thing: the guidance. And here it is. This is the slide that absolutely torpedoed the stock. On the left, you see what they just did in Q2. On the right, what they think they're going to do in Q3. Revenue is guided to drop sequentially pretty significantly, and EPS is guided flat to down. When you're telling a story about a generational opportunity, a forecast that looks this weak just doesn't fly. The hype and the reality slammed into each other, right here. And then, to add insult to injury, they dropped this little bombshell. They're taking a restructuring charge in Q3 to pay for layoffs. Now, management tried to spin this as a good thing, saying, hey, our new Gen AI tools are so good, we're more productive. But let's be real, the market reads restructuring and immediately thinks weakness. It suggests they're having to cut costs because demand just isn't there, especially in that struggling Oracle practice. So what is the core conflict here? How can you have this incredible, game-changing story on one side and a 9% stock drop on the other? And this really is the heart of the matter. The market is basically screaming, we are tired of the story. We want to see results. Investors are demanding to see how all these flashy AI investments are actually making the company more profitable today, not 5 years from now. And that weak Q3 guidance? It was the exact opposite of what they wanted to hear. Okay, so putting this all together, what does it mean for the stock and for the next earnings call? Here's our official take. We're slapping a market perform rating on the Hackett Group. And that rating really reflects this exact conflict we've been talking about. The potential of their AI strategy is absolutely real. It's compelling. But
the short-term problems with execution and that soft guidance are impossible to ignore. It is the definition of a show-me story right now.
So if you're looking at this mess and smelling an opportunity, here's a way you could think about it. The thesis would be that the market totally overreacted and has created a disconnect between the current price and the long-term AI value. The catalyst you'd be waiting for is some concrete proof that the AI stuff is working, like a big licensing deal. So the trade? Instead of just buying the stock and hoping, you could consider selling cash-secured puts below today's price. It's a way to basically get paid to be patient, defining an entry price you're comfortable with while you wait for that AI story to finally show up in the numbers.
And of course, I have to say it, this is not financial advice. Please do your own homework. At the end of the day, the real test for Hackett is whether they can finally close the gap between their big AI dream and their financial reality before Wall Street's patience completely runs out.